What is going on, guys? It is Chris here, and welcome back to the channel. Today we're going to be starting the series of just daily recaps going over what the market did and how you guys can all better your trading, as well as myself as well, because obviously we're all learning at all times every single day. So today I want to cover both NQ and ES because I think both charts had amazing price action today, although I only traded NQ. So we'll start with ES actually, and I'm just gonna run you guys through exactly what I do on a daily basis. Like today I passed a funded account. Today I made, thousands of dollars on my main account, and like I'm gonna show you guys exactly what I'm looking at on the morning session, the afternoon session, during lunch, and just throughout the entire day. So firstly, we'll start off with the daily chart here, and we know that we have been pushing in the market for the last few months now. And so although we were in this bear market, we're now in this bull market. So we're just overall expecting upside. And although we today had a very large red day across the market because tech was bringing us down, we're just kind of expecting bounces and the market to just be buying up these bounces and pushing it into new highs. So today was a little bit different, like I said, and I started off with the daily. I didn't really see too much. And then I went down to the hourly on ES. Again, I don't see too much other than this range that we broke over here. And maybe we can use some of these wicks in order to find 50% retracements and areas for bounces. But generally, when we start to approach this consolidation over here in the morning, I'm thinking already, okay, we're going to be looking for bounces maybe in the late day. But overall, it's going to have some selling pressure into these zones. There's not going to be a reason for it to just hit this high to the tick and start bouncing. It's obviously going to have to dig a little bit further if it actually wants to have a big ass sell day. So I went to the 15-minute, and immediately I noticed this little area right here, and I think this is something that I don't see anyone talking about because I guess I could say I discovered it. But what a lot of people do is they use their fibs and they put a 50% retracement on a range. So for example, here they'd put a 50% retracement like that, and then they would look for a bounce right there. But look what happens when we approach this little line here. We actually break to downside and we continue. So it goes from 69 down to 63. Your stop loss will probably get hit, and if you're diamond handing, you're not really going to have too much profit anyway, and it goes even deeper. So what you want to do is you want to actually be using wicks and large candles to use to apply to your fibs, right? So in this case, this is what I've kind of discovered is this candle right here is right after, it's just post Apple news. So after the Apple news came out in the morning, we had this big ass rally and tech was just rallying, just everything was pushing. It was absolutely crazy. And right here, I would just be drawing this fib, and I would find 50% is at this level right up here at 75. And then there's also this big ass wick which grabs liquidity. If we go to a lower time frame, it grabs liquidity below these lows and enters back into this order block before our big push in the afternoon session. So then I'm also going to be grabbing a fib, and I find that level is right here at 72.25. So now when I have both of these drawn out, and again, I'm just using the wick, only the body of the wick for the second one, I notice that we have the 75 level, and I'm just rounding it here because I'm not doing it super exact, but 75, and then we have about 72. So I draw this zone, which I think it could possibly bounce off of. And when we scroll over on our chart, we can see that on the 15-minute in the morning, this is exactly when we're bouncing. So on the 15-minute, of course, you can look at various time frames throughout the day. You should always be switching between them to see if anything else is telling a different story, like a larger time frame is telling a different story. We can see that we close above with this wick. So now we go down to the 5-minute, and we're looking for a trade. And right here, we can see this is where the 15-minute close, of course, and we're closing above this range, and we're obviously bouncing off of it. We're having huge sell-off, and then randomly we're bouncing, right? Very, very random, right? And then we go down to a 1-minute, and we can find an area where we can maybe enter on a break of structure, on a retest of that break of structure. So in this case, it looks like we have a little FEG. So right here we have an FEG. We're just taking the high of this candle, and then we're going to the low of this candle, and we find an FEG on ES. And the reason that I would play this FEG is because we're actually breaking out of this structure right here. So we find a little high right here in the market. We also have this high. There's no other obvious highs on this downtrend. And once we break above this here, that means we broke structure to the upside. So we're looking for longs in this case. And the nearest FEG is this one right here. Again, ES is a little bit choppy, a little bit of a small range. But nevertheless, we are seeing a nice little FEG there, and that would be my entry for long. And of course we can see it retest a little down here, but if you're looking for quick profits, that's something that you can play. And then we go all the way up here, you know, probably rejecting some sort of FEG or some level to the upside. But that's a nice upside play, which you can be looking at in the morning. I did not play this. ES just kind of a shitty range, so not my cup of tea. But then we go in the afternoon to this 15%, but 15-minute red candle. So if we go back to the 15-minute chart here, we can see that we break through all of this support here, and we're going back into this range of consolidation that I spoke about earlier in the video. And so what I'm looking for is I'm drawing a fib again. This is a very, very important candle. And I know you guys have maybe seen me talking about this in the Discord, saying you want to be drawing the fibs on these large candles that are making the large moves. And everyone's always asking me, how do you know like when to draw them, right? You can't just randomly draw like on this one right here and expect a perfect fib rejection. Like here it had a great rejection, but it went a little bit above. You want to look for very, very nice rejections and wicks. You can see it held above here. And of course, this candle is already opening above as well. So that's something that's going to be a little bit concerning if you're looking for exact entries. In this case, we're seeing a candle that breaks support and breaks the low of day. So we broke the support that we used earlier. It was very, very clear support. Obviously, we're wicking off this zone, and we pushed dramatically to the upside. And then we randomly are breaking below here. It's not random, I'm being a little bit sarcastic, right? So we're breaking below here. Now we draw that 15-minute, 50%, and look what we're rejecting, right? We go down to the 1 minute and look at this area of consolidation, and we break to downside. So let's say we're taking a trade off of this. Our entry would be right here, just right at the line. We want to get perfect entry. And where could our stop loss be? Our stop loss, if you want to be very, very tight, right there in this zone, but preferably either here at the top of this zone in case it retests and then goes lower, or just at this little swing high. So that's a pretty deep stop loss. But again, what's your TP going to be? Your TP is going to be this low, or, and this is a very important thing, Friday high day from last week. So typically when you approach the end of a week, let's say it's a very bullish week, you might see retracements back to a Friday high day or a Friday close. And in this case, Friday back here, we had a very, very nice high day and then rejected, and then the market dug lower. So I'm expecting a bounce here off of this big ass sell-off day that we had today. And so that's exactly where I have this level drawn out. And so that's where I would be exiting. It'd be about a 1-to-1 risk reward ratio if you want to, get technical, but you can have your stop loss in through here, right there, right there. And if it hits, it hits. That's just going to be a bad trade then. It's just, it fucking happens, But otherwise, very, very nice trade. Goes to 8 points of profit, and then you're out of that trade. That's all for ES. I believe NQ is a lot better, so let's just hop right into that right now. So guys, if you don't want to stick around for the NQ part, that's really fine if you just want to get ES out of the way and just do that. But I would definitely recommend sticking around for this portion of the video because I think it's important to understand both sides, especially because we can see that the NQ chart is actually a lot different from the ES chart. Notice how we have these highs here that we're just retesting right now on ES versus on NQ. We already dug way below them. We were there on, earlier this morning in the AM session. So let's get right into this. I traded this and I made all my money off of this day. It was a crazy, crazy good day. But I'll go through all the trades I took as well as the stuff that I did not take simply because I wasn't trading. But we start off again with the hourly chart. Daily, I didn't see too much, but there is this purple little zone right here, which is a high before the daily breakout. So if we do go to the daily chart, I know it's a little bit cluttered, right? This purple line right here is the high from Friday, June 23rd. And so I'm looking at this level saying this could be an area where we retest just like we had on ES on the lower time frames, and we could have a bounce off there, especially off of such a dramatic sell-off. Now I do think tomorrow could be a little slight green day before another sell-off day, and then tomorrow we can hit these levels down here. But that's just something I have in the back of my mind where I'm like, okay, if we approach those levels, that's definitely where we're going to be looking to start to lean long, right? But let's just start with NQ 15-minute chart. What I do see is the exact same setup that we saw on ES. It's just a tad different in terms of when we were looking at this, because this is actually not close to when the Apple news released. Apple news was, I believe, over here on Tuesday. And so with ES, we're looking at the Apple news release with those wicks. Now in this case, we're doing the exact same thing, but it's wicks instead of a candle body and then simply a wick on the other one. So 50%, 50%, oops. I think you guys get the point, but That's the range that we're going to be finding. 24.5 or 24, I guess I rounded it here, and then right up here to about 60. So it's a big range, right? We have about a 35-point range between that zone, but if you're sizing small enough, you can definitely take very nice day trades off of that. And so in this case, we can see it wicked just like ES. So we go to ES, we can see that we're wicking at the exact same time. And since we have the exact same zone drawn out on ES, we know that they could very likely both be bouncing, and ES could be dragging up NQ if it finds a little bit of strength. So we go down to the 1 minute just to look at our entry on this. You can see it goes right below, but of course, higher time frame tells us a different story, which is we're wicking, and we can see this big ass green here. And then if you want to play a break of structure, it'd be a little bit more difficult. You would probably be wanting to look for an entry like here when you're seeing this wick, 50%. Again, we're grabbing liquidity right above that, and we're trying to break out of this zone. So that's why I'd be using this wick, not any of these wicks down here or anything else. And we also have a little bit of an FEG right there. So that would be a perfect entry for long. And then, of course, a little bit smaller profits than ES simply because NQ and the rest of tech was very weak today. So that's what I would be looking for on NQ, at least for this specific trade. Now let's go right back to the 15-minute chart. We can see that we rejected off of this zone later, so we actually broke below. But something that's very important in the PM session, and this is probably, I would say, the most important part of the video right here, is this FEG. And I took a short off of this. You guys probably saw me talking about it in the Discord, but I sold very early simply because I'm just trying to, conserve profits, and the money I made was completely fine with this. I was very happy with it, but my ultimate price target was down here at this blue zone. So it would have been about a 100-point trade, but my entry was, I can pull up the entries, but I believe it was right in here or on this green candle. I'm kind of forgetting now, but I can check the executions. This is where I entered the trade, and this is a very important candle. So we can see that throughout the day here, right after Eastern time, we go into the PM session, so right after noon, we can see a big ass sell-off during the lunch hour. And so traders are all off at work right here, but they come back around 1 to 1:30. That's when the algos will start hitting again. We can see after this big sell-off, this is simply time distortion. They're simply chopping the market and waiting for a move. Now, I don't know about you guys, but if I were to inverse this chart and this were, say, an upside move, and we're right above a high, and we're chopping around, typically I actually see a grab for liquidity and then continuation to upside. So let's go back to what the chart looks like now. This is exactly what we see, right? So we actually hit these highs. I think it's even to the dot, 14.75, and we hit 14.75, so equal highs. But that's not at all concerning due to the fact that we have this very bearish structure. We're seeing a big morning rally after the sell-off, and we sell right back off into new lows. I've really never seen the market go sell-off, consolidation, sort of upside, sell-off, consolidation, and then somehow we go upside. Like, I've really have never seen that happen. So big ass move to the downside, and this is the candle that I'm talking about. It's basically detaching itself from the rest of this zone. We're breaking out of this zone, and this is where a lot of traders are not going to go short. They're actually not going to go short because everyone thinks this is going to be a liquidity grab to the downside. But if you want to go short, you can have a really tight stop loss. So let's say you entered on this candle, didn't even wait for an FEG re-entry. Your stop loss needs to be up here or even just at this candle high. Because if it breaks that candle's high, it's just going to start flying again. It's very unlikely that that happens, but that's just the truth. That's what's going to happen on this trade. If it breaks that candle's high, you're going to take a loss in the trade. Otherwise, it's detaching itself. It's breaking away from this zone, right? It's literally just breaking the support that it had from this time distortion. And that's my entry here, and what we see is a big sell-off. It goes for more than 130 points. Now, the zone that we actually bounce off of is very key as well. I know the video is getting a tad long here, but FEG, guys, we're detaching. This is the time distortion, and if we go to the 5-minute as well, we'll just look. Let me just show you guys. You can see it's not an FEG, of course, really on the 5-minute, but on the 1 minute, it's a very big red candle. We retest and then we sell off. Even if your entry is down here, this is where people start to long for some reason. I don't really know why. It's obviously going to be reaching to this target. So if you just want to take scalps in through here off these little bounces, like that's what's going to happen, right? It's not like the market's going to go up every single freaking day. So after we do that, we actually reach this zone down here. Let me go to the 15-minute. I think it's on the hourly. So if we go to regular trading hours, this entire time I've been using extended trading hours, we have this big ass gap. 5 minutes can be perfect for this. Big ass gap. So what I did is take the close from settlement on Wednesday, and then I brought it back up to the opening price on Thursday. This is last week, right? And what we see is this big gap, and I'm thinking 50% of this gap is where we could very likely bounce. So I'm being a little bit greedy, but this would be an entry for long. This is where I'd be entering long. I'd be entering, even if it's just one micro NQ, you set a very deep stop loss, 57 points, but your entries here and a swing high would be somewhere over here. This trade would be, if you're actually, holding it and being smart about it and following your rules, you could easily bag 150 to 200 points on this very easily, even just off one MNQ, one micro, right? So that's the level I was looking for. Of course, we just kind of enter that gap and we immediately start bouncing. A bit unlucky, but nice little relief rally at the end of the day. So I know I kind of split into two 7-minute parts here, 8-minute parts, but I really hope this helped, and maybe I'll include the executions at the end. But great day for me. I really hope this all helped you guys in your trading. I'll see you guys tomorrow. Peace, yo.